The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi everyone, Basil Chapman here, sitting in for the one and only Larry Pesavento. I'm the host of the Tiger Technicians Hour, noon to 1 p.m. each market day, that's Eastern Time, and the author of the Opening Call Daily Newsletter. And I have a really important webinar coming up, an all-day, 7-hour webinar tomorrow coming up, and we'll be discussing the different patterns that we're looking at. You can see right here, here's the Dow from yesterday. This is the Dow cash. Closed at 29,783. We need just one touch of 29,965 to start leg D in the Chapman wave methodology. We're always looking for 4 higher peaks. Let me just show you this right here. So you start from the most identifiable lowest low bar. That's this bar at 26,143 on the 30th of October. Count each successively higher bar, alphabetize them alphabetically all the way to a G, but it's at the 4th highest peak, peak D, that other things can happen. It could recycle, it could do a whole bunch of things. That's what we're looking for. So what have we got here? We've got a pattern that I call, all right, let me move this away. I call it the falling axe. It's just a kind of a nickname I gave for a declining cone pattern. Price goes all the way up, and then it starts to pull back and makes lower highs and much lower lows. All of a sudden, it turns around, and it makes like a cup or a V-shaped pattern. If it takes out that declining higher trend line, that could mean that it has a one-to-one extension to the upside. I've seen these one-to-one extensions go 4-to-1 to the upside. So what do we have here? We have this pattern in the Dow where we've broken out once and we've just extended, and that would take you to the high it was made at 29,964. If it goes higher, that's going to be very important, but this is like a falling axe or a flag pattern, and it's broken out to the upside. Then there's an H pattern, the dreaded H pattern. This particular pattern right here, I'm only looking at chart patterns, 3 patterns altogether. Straight line up, straight line down, cup formation, arch formation. You get a combination of call it the dreaded H, because if you take out the left side low, keep going down, and inverted Y is very positive, because if you take out the left side high, look, here's a little on the left side in the daily chart, that's like a little Y pattern, and we took it out. So that could be very positive. So with that in mind, just keeping it as simple as possible, we've got the Dow futures at this point up 124. There's this like flagpole, and we're trying to make this pattern occur. If 30,000 round number high, I always look at round numbers, especially at major highs, 30,000 to the penny, 3000.00. That's what the futures did. Very unusual. Look at the pullback we had to the 28,800s. Now we're at 29,847, up 127. What happens with this weekly chart, the chart in the middle, and then the monthly chart, which is in leg C, if we're always looking for a buy signal to buy mode in the Chapman wave going to a D, that means 2021 should see higher prices. Look, here's the Dow monthly. Here's the S&P. The S&P right now, the cash was did well yesterday. It needs to break above 3645.99. That would be very important. But it's only a leg B in the monthly. It should still go to a C and a D. The E-mini, as we were looking at before, the E-mini is trading right here. It's up 625 at 3613. Here's that one-to-one pattern, the falling axe. There's the declining low, much lower low on the bottom. Breaks out, goes one-to-one to the upside. Now we've got another one, and that says it should take you towards the 3660s. We'll see if that occurs. Then I've got a technique that I call the Chapman wave inside track repellent zone. Well, look how it held the price between the green and the pink line here. It held the price. If the S&P decisively goes into the 30, let me just put it over here, 3700s on a closing basis in the weekly, that is really positive. So with that in mind, let's go to the QQQ, which has been the laggard. The QQQ down 42 cents pre-market at 291.85. It had a peak D. Remember, peak D is where you start to look. You raise the foot of the accelerator, hover over the brake, big pullback, fills in all the gaps, and even went to the opening gap that was there around about the 7th or 8th of November. And now look at this. It's kind of struggling. It's gone sideways. Cup formation goes to a second, like a double U formation, like a W. And it just gets repelled. It hasn't been able to break above 303. So this is going to be very important. Look at the IWM. Became a leader. The IWM right now is up 41 cents, 178.87. I should mention for full disclosure, we've been long the Dow from the day of the low, March the 23rd, via option calls. We had fantastic 400 and 600% gains. We also went into the diamonds, which we took profits there. We got the diamonds on the 3rd of April, and we still long from just under 21,000. So we're taking two little positions off. Look at this. The IWM has broken out to the upside. This is either an E, or this could be quite exciting. Look, this is a leg D in the weekly chart. Only a leg C in the monthly. This is very exciting action. So let's look at the, let's go to gold. Gold is, at this point, is down 8 at 1876. Look at this sharp decline, and now it's making this H pattern. If gold, this is the continuous contract, trading at 1876 right now. If it takes out, closes below the low of 1848, that's the low of the 9th of November. That's the dreaded H pattern. It can go even lower. So far, it's just making this little H to a lowercase h can go to a lowercase m formation. If it takes that left side low out, that's going to be very negative. So gold's at a spectacular move with that peak D, the fourth highest peak. That's what I'll be teaching tomorrow in my webinar. This is where other things can happen. We're watching the sideways consolidation. Still very positive leg E in the monthly, peak E, I'm sorry. And look at silver. Silver's got a way better pattern altogether. Look, it's holding quite nicely at the 24.49 level, down 16 cents. But look, the weekly chart is still holding well. And that monthly, I can only call this a peak A. And that says it could be in 2021 a B, a C, and a D in silver. That's really interesting, isn't it? Dollar struggling. We've been long the dollar since April 2018, just at 90.07 via the UUP. We watched it go all the way to 103, well, 102.99 in the fund, dollar index fund, and then pull all the way back, and it's trading right now 92.44. It looks to me with this H pattern in the weekly that it's going to take out 91.75 at some point, and then the 200-period moving average in the monthly at 90.81 will be critical. So, but we'll see what happens with this. And let's go to the EUR USD. This is the euro-dollar currency pair. It's just holding at the higher level. That's the same pattern as pretty much as silver, actually. So we watch this closely, because if it's able to get to 1.196 at any time, either in November or beginning of December, that's going to be really important, and that'll be targeting the high that's made 1.2s. Let me go. I'll talk about BTC because the subscribers to opening will be long since October 14th, I think it was. GBTC fund, and it's trading here sub 245 at 17,975. We'll talk about this as the cup formation, the monthly chart, and the cup broke out. I'll be back in a moment. Now the cup Pesavento futures up 130.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Basil Chapman sitting in for the one and only Larry Pesavento. My pleasure to be here. Larry will be back tomorrow. So just let me show you some of the patterns that we're looking at. One of the reasons why we went long after not touching. Absolutely touching. Remember, for those of you who remember, it was December of 2017. Yeah, I said, I came back, when we came back on the air, I think we had a day off or something like that. And I said, I can't believe it. I was the 1st of January. Yeah, I think it was 1st of January. And I said, I've just been to a neighbor, and there were kind of a New Year's Day evening party, I can't remember, and everyone was talking about Bitcoin, and one person there in particular said, "I missed out on the dot-com bubble. I missed out on the housing. I missed out." And he said something else. He said, "I am not missing out on Bitcoin. I am fully in." And I said, I've got a kind of a feeling. In my work, I'd got a sell signal right at the top. And I said, just be very careful. So I said to him, I'd be a little careful because a lot of people are talking about it. Usually when people talk about it, when the layperson gets involved, that's usually not a good sign. And of course, that was 222,465 right there. That was December, I believe. Let me just go. Yep, December of 2017. Had a little bit of a pullback from 22,500 to 5,049.10. In December of 2000, and I said 16, should be 18, 19, that was 18, yeah. I didn't type that incorrectly. And then it had a big spike towards the 16,000 level and then plunged again to the 5,000s. But what I really liked was this pattern here. So you can see this cup, we made a peak F in the Chapman wave right there. That was on the August 17th. And then we came down very sharply. We came down in almost the same time frame, even a little quicker, if you use the plumb line of that day, and you come down to the gap up high of the 24th, it's trading in the 10,200 area, and then it gaps up on the 27th, and 10,530 is the low. Well, look how it fills it in. And it's a beautiful kind of an arch formation, almost a head and, this is the perfect head and shoulders. One of the patterns I hate. Why do I hate it? Because by the time you recognize it, it's almost too late most of the time. But there were other things that said this is that right shoulder failure right here, the dreaded H, like an inverted V at 13,263, comes plummeting down to 89.15. And then it starts, look, exactly now. I know Larry never talks about moving averages, always makes a joke about them. I say, whatever technique works for you, have respect for it, because if someone uses it, that's fine. That's all you need. You need to use something very consistently. Well, it made this low on the 9th of September, bounces 89.16, bounces up, makes a peak B, pulls back in the H pattern, but has a successful right off the 200-period moving average exactly on the 9th. It doesn't go back. It holds the 10,400s, and then it starts working its way. You see these are the Chapter wave falling axe formation, each one's to a high of importance. It's nothing to do with GAN. I like to use the chart formation itself to tell me I don't want to impose some other, I wouldn't say arbitrary, but in a sense it's arbitrary because you're basically imposing a template. I rather would let the price that you're following be the template. So here it is, and it extends, and this is the Chapter wave inside track repellent zone, and we went long right here on the 14th. Of the GBTC, I may as well go GBTC, that's the fund, right there. There's the falling axe formation I drew in. We broke out, and I said, okay, at 12.48, we had a short-term position and a long-term position, because subscribers to my opening call kept asking me, when will you finally get back into, or go into Grayscale Bitcoin Trust BTC? Well, we did. And then I drew in this blue and then the pink one. And it also has a technique that I'll be discussing tomorrow in great detail, because you really need to know what happens if you make your fourth highest peak and within 3 bars you make a new high. What is the implication? Implication is you can have an alternate count with a whole brand new set that goes to peak A, peak B, peak C, and even a peak D. Well, that's what we've got. Here's the first, second, here's the third, the Chapman wave 1-to-1 parallel extension. The whole thing about this is that it must be in the same angle. And that's what we got right here. It's gone above that. So this is the area that I said within the next 3 to 4 sessions, I wouldn't be surprised if Bitcoin does start to has a bit of a pullback. Another technique that I used was in this right here. There's a 1-to-1 propeller shaft extension. I drew this in about a week or so ago. I said, here's the 1-to-1 extension. It should take you to the 18.90s based on the technique in the Chapman wave. And we went 1890s, looked perfect last week. And then all of a sudden this week, we've extended to 20.16. Pre-market, it's at 2020. I like, if you're using market trades, then stay with that. Remember, this doesn't really trade overnight. I think there are a couple of positions that some software packages allow you, but mostly people have a tough time. So this is the one extension, the 2 extension, yes, the 3rd extension. It's getting close to some kind of a topping action, but it means that the 17s, it should be really strong initial support if there is a sudden decline. And here's the weekly chart. It also had a Chapman wave falling axe breakout. This is the declining cone formation. And the monthly is now in leg B. Look at this beautiful cup formation, 38.71 December of 2017. This is the pattern that I call the Eiffel Tower. Goes straight up and straight down, like an uppercase A. All right, enough of that. Let's go to the grains. Wheat made a pattern that I call Chapman wave double top at peak C1, C2 is like a peak D, but the technicals fail, but not the price. The price didn't go to a D, and then the price starts to come down. So this is wheat. It's struggling a little bit here, but look at soybeans. Soybeans, another high. This is a multi-year high. You've got yourself a lopsided cup formation here, or a rectangle. I'll be teaching this technique as well, and that says there's a chance that over the coming weeks, the high that was made back in continuous contract March of 2018 at 1223.5, it gets smoothed out. So that's the date, and the chart pattern is perfect, but the price will change. It could test that. And here we are in like G/C in the weekly. Very, very strong soybean contract is up 12.5 at 1182. And let's go to Caen, as we say here in Boston area. I'm from Newton, Mass, just outside Boston, about 6-7 miles. Okay, Caen, trying to get back to that peak. If it takes out 428, the round number high of the 11th, that actually goes to a leg C, and that extends the weekly. And if the weekly can get to 432, that 444 200-period moving average becomes a magnet. And sugar, which had a spectacular move, is still holding really well. It's up 21 cents at 15.52. That's all part of DBA, which is a fund that we own from the 1377 level. That's a 1544 in leg C. There's this Chapman wave circle. That's an extension to the upside. When we get back, the market will open, and we'll have a lot to talk about. Council Chapman sitting in for Larry Pesavento. I'll be back in the phone as we go. Goodbye.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back, and so the futures, the E-mini is up 350. It was up a lot more. It hit 36.23. It's down 13 points from there. There's the 2-minute chart, peak D. See the pink line? See a little bit of green, a little pink line? We're waiting for that to go green, and that'll be to say that we're starting to move higher. At this particular point, that early open is early positive side of it is falling away. And now we're looking at the 200-period moving average. See how important these things, did I even need to look at the 200-period moving average before? No. but it became important. Here's the 5-minute chart. Now we're about to test it. What happens here is going to be very important. Will this become a support level? And in 15 minutes, we look at the market, and all of a sudden, the E-mini has gone from that doji candle. Love doji candles at turning points right there. The doji candle high at 745 at 36.23.25. And now we've come down to a key support level. And look, the on-balance volume is sharp. These are techniques that every tool, every trading platform has. The standard MACD, I haven't changed anything. It's 12.26.911. The stochastics, the slow stochastic, 80%, 20%, 14.3. None of this is fancy stuff. And on-balance volumes, this is Joe Granville, but it's put into the original one from the 1950s, I think. I started off using this when I started technical analysis, using chart patterns. I used Joe Granville. I used to write the numbers on paper and draw in pencil all the different charts, and it was impossible. So once computers came around, it was fantastic. So here we are. Look at this, holding the 200-period moving average in the 5-minute chart. All right, let's get back to the nitty-gritties. Where is the sorry, I didn't finish. DBA is the agricultural fund, DBA, and so this is the German Dow Jones Germany stock index. For some reason, I don't know why I don't get the. I used to get it for years. The FTSE and the DAX, etc. The Corona. We're looking at this 396.36 in the Dow Germany index, and it's got a pattern that says it should make it a leg C above 399.05. The price is different, but the pattern should be the same, and the dates are all the same. So whatever the high was 3 days ago, it should take it out in the next couple of days. Now you've got yourself a Chapman wave falling axe. Look, lower lows and much lower highs and much lower lows. If at any point in the next, it's a weekly chart, so let's go all the way through to middle of December. If there is a break above, it's at 396. So this is the numbers that you use could be different because you're using the actual text. So if there is a move into the 399 and then 40, what was the high right here? Into the 416 area, 10 points from here, anytime in the next couple of weeks, all of a sudden, it's a really important breakout because it starts leg C in the weekly chart, a monthly chart, and you've suddenly got this left side high that was made back in the middle of February in the 420.93 area, plunges down to 259. I mean, that's huge. And now it's come all the way back. So that'll be very important. If instead there's a close under 380, 383 is the orange 200-period moving average, that's going to be a negative. All right, let's keep going here. We want to look at the TLT. TLT is bonds. The TLT is trading up. It's up 61 at 159.42. This is really important at an island reversal, but anything that trades overseas before our market opens is invariably, you'll see it in gold, you'll see it in everything that trades out of our country. You'll see gaps. But this isn't important because it came with the on-balance volume made a significant low. The green, that's the 9-period differential in the MACD, made a nice V-shaped recovery. So that's just saying that yields at this particular point aren't breaking out, even though, I can't do it right now, even though if you look at the various yields, they've had a really big rally, but they haven't really broken out. So that's going to be very important. But at any point, if the TLT bonds break and you get the TLT trading for 2 weeks in a row under 153, something else is happening. And maybe that's what we're looking at with Bitcoin. That's telling us that looking out, there's a certain sense of security because look what's happened to the dollar. The dollar is down 4 ticks right here, 92.39, but it's off the 103, 102.99 dollar index high that was made at that peak E in the monthly, and this huge rectangle is coming towards the bottom. It says to me that this administration, at this particular point, is quite happy to see the dollar pull back because it really helps a little bit for those cross currencies. You know, in other words, the intra geopolitical, geoeconomic activity. And the EUR, I think I did this, EUR USD, Now look at that. Now, something I haven't done is high-grade copper. So this, to me, is really important. High-grade copper is at the upper end of a 2-year rally, 2-year getting back to where it was back in 2018, after being up in the 3.40s and plunging down to $2. Now it's at 3.20. And that says to me that copper is telling us that internationally there is a recovery going on. And when you put it together with wood, which is the iShares Timber and Forestry ETF, I used to have this notated in legs, alternate legs D in the weekly. But look at this monthly. This is a massive leg A to the upside. That's global. So that says to me there's actually a recovery going on that most media are not talking about, but it's there. It's there. You can see it before your eyes. What's the expression? You don't want to believe your lion eyes. Okay. There we go. Okay. So that's important to me. Now, let's do a couple of things. We'll go live. I had a couple of questions. What about Amazon, etc.? What about the stocks that you've had that you call them the screamer stocks? I don't know if all right, I'll do that. So yesterday we had a stock that we bought under specific conditions. Himax, I don't really care what it is. It's a technology company, display imaging in the semiconductor area. So it closed on Tuesday. What is it? Monday. It closed on Monday at $4.58 or something like that. $4.53. It hit $4.54. I said to buy it within the first 20 minutes of the open, and you've got to buy it underneath $4.47. We bought it at $4.46. I said 15-cent stop. It held the stop, and then it took off, and it ran all the way, almost 8%. I call these screamer stocks that we have. Now, for anyone doing my webinar tomorrow, you automatically get my monthly. You get a month free of my daily newsletter, The Opening Call. So anyone who has signed up since we've been advertising since last week has already got 2 positions that it could have made 6% on one and over 8% on the other. And it screamed higher. And I said this morning, just for money management purposes, at the open, we're going to take off a little bit, and it opened at $4.89. Trade 446 to 489. I'd say that's a pretty good profit. And I still would like to keep it for now. It hit the 200-period moving average, and it says you got to be a little careful because that could be a repellent zone after it becomes a magnet. These are techniques, easy techniques. I mean, I'll go to blank charts. Maybe I'll do that right now. We'll go to a blank chart right here. I've got a blank chart, and I'll just grab whatever it is. Tell me, Amazon, and I'll show you how to analyze it without any technicals. You can just see this huge oval pattern right here. Makes it. Yeah, breaks down or breaks up. I'll be back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento. Let me show you. Here's the 2-minute E-mini chart. This could be anything that you want. Remember, I was discussing this, and I said that there was a negative candle in the 5-minute chart at peak F that happened to coincide with the peak D in the 2-minute chart. And we watched this coming down. I showed you the patterns. There's the dreaded H, that arch pattern. It went to a lower low. And then I said, whoops, I got a candle here. But at the same time, I said 200-period moving average. Will that become important support? If you use moving averages, it's how you use them, how often you can use them, and what they tell you, and how much information they give you that is viable, that is usable. Otherwise, it's a waste of time. Did I need to even look at the 200-period moving average as you were there? No, you were way up. But I was looking at the 9, the 14, and that crossed negative. Now we're going to watch to see if the 2-minute chart starts to cross positive. Let me show you something here that just give a little lesson here as if a prelude to my webinar tomorrow. This is to demonstrate. Yes, the 2-minute chart is like a daily, the weekly is like the 5-minute chart, and you can say the 10-minute is like a monthly chart, right? So the daily or 2-minute chart has just given a nice signal. And what does it say? It says that if you use certain techniques, let me show you something. I'll draw you a vertical line right from that peak D. Look at the way the MACD turned down. Look at the stochastic right here. The stochastic is giving you an indication that that right shoulder was down below. It was fading like a dreaded H pattern. It wasn't as strong as it was at that peak C. That was a hint to say, be careful. And wait a minute, the relative strength, the little gray line started turning down. And look at the on-balance volume, almost a perfect turnaround at the top. Wait a minute, if I do the same thing here, do I get the equivalent on the downside, like a mirror image? Yep, there's the doji candle, very important. And it turns around. On-balance volume turned around. Relative strength was low and turned around. The MACD was starting to see the histogram turn up. And the stochastic had made a low earlier, so this was a higher low. So that's just saying, that's a start. That just says, I've got a risk. I know what my risk is. Let's just say I got in at 36.10 or so. I can put a two-point stop in and just say, hey, take off from here. Why? Because you might have made, at least for this particular phase, you could have made a low of importance because you've had the opening. You're already 12, 15 minutes into the open. We've got rid of most of the selling. Maybe there could be a rally. See, here we are. We're off the low, which is at, let me just give you the exact low, 3606.50. And you're trading now at 3613. That's nice. It's a start. It's I call this gray A and gray B. Why? Because it's just the start, the left side high. We haven't even got there. Wait a minute. Sure, you can draw something to show me where where the target is. Sure, absolutely. I'll teach this as well. The left side, right side, price, time match. If you can't use the plumb line because the middle looks like it's going to take too long or too short to get there, then there are other candles. So what I would be using is initially I'd use this candle right here, and I'd say, great, let's see if within this particular time sequence, because the plumb line doesn't work exactly, let's say new parallel, make this green. It could fail. Remember, we are not the chart. The chart is the chart. We're doing our best to use our technical analysis to be able to project. That's all we're doing. So I take that, I'll teach you what you can use for the Chapter Wave inside wedge target resistance line. Will it work? We cannot say, as Larry likes to say, nobody knows, but you do the best. You do all the discipline and the training of your techniques to say, hey, look at that. So this says that by, will we still be on the air? Yeah, 9:54 to 10 o'clock, there's a chance that if we can take out this high right here of the Chapter Wave inside wedge target resistance line of 36.1450, we're going to go towards the high that I started this at peak, that peak B minus that failed over there, 36.1550. So we got a little lesson. This is like tomorrow's lesson encapsulated. And what are we doing? I'll show you the chart patterns. I'll show you what you can use. I'll show you why the MACD is important. I'll show you that if the stochastic can go over 80%, this thing will go higher. That's very important. And that's just a 2-minute chart. The 5-minute chart has to sit in the background patiently waiting. Why? I can't hand over the baton to this until it at least gets to the 36.16 level, because by then the MACD would have crossed positive, the histogram's improving. Anyway, that's a little lesson. We'll come back to this. Who knows if it'll work? Doesn't matter. At least I showed you some of the techniques that we'll be using tomorrow that we'll be studying. Let's go to the question that I had. Oh, I've got a question coming in. GE. Let me see what it says here. GE. Paul wants to know, can you look at GE and verify its PE ratio? I do not have a clue as to the PE ratio of G, but all I will do is, just like you could have done, Paul, and gone to your questionnaire, which is Google or whatever it is, and say GE's PE, question mark. Bam, and it comes up and it says, GE's, what is PE ratio? Man, that's not what we wanted. GE. Okay, so while we're doing that, let me go to GE, General Electric. General Electric right now, this is let me just show you what I'll do. This peak E here. There it is. I haven't finished notating this, haven't done this. This is all hand charted. Yes, I've had people do it automatically to chart, but there are just enough variations based on the Chapter Wave methodology that I can visually see in a split second that says to me, I've yet to come across any formula that's able to get the subtleties that I use all the time. So the core is simple. You go from the lowest low bar and you count. This would have counted peak A, made that a B. But I say every peak gets counted in the Chapter Wave. That's your only obligation. So that's an inside A, gray B, gray C. And now all of a sudden, you get this leg D at 990. Really important. The weekly chart has gone to a leg B. I like G. I like it very much. I was thinking of putting it into my newsletter, but I think we've got a lot more exciting stocks. Maybe if G has a big pullback between 850 and 830, that's the time to look at it again, because it is showing that there is a turnaround finally occurring in General Electric. So let me see if I've got any information here. It says, real quote. What am I doing here? G, almost PE ratio. Do they tell me? PE ratio of 21.43 times. Compared to the 56. So GE's monthly trading 12-month PE is 56.94. You know, I can't give you a sense of what that means in relation to others in the group, but I'm just saying that as a chart formation, GE has turned this whole cup formation area into that peak D top that was made at 12, what was that, 13? Yeah, 1309 back in the week of February the 7th, plunges down to the 5s, and now it's almost doubled. It's at 992. This is really a good pattern, but I would not be surprised if over the next month and a half you do see some pullback in G towards the 8s. It's at 993. Between 880, if it breaks under 880, then it'll go down to the 860s. 850 is probably where I would look at it for a longer term position. I'll be back. Basil Chapman, Tiger Conditions Hour. You're right back in a moment. Sending for Larry Pesavento, Gaza, Bounce Green. It's any up and off. Keep going.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the pattern we were looking at, Basil Chapman saying for Larry Pesavento, there's that dreaded H. It took out the left side load, went to a trough D. Now it's going to try once again to try to form some kind of a base. And now the 5-minute chart, the 200-period moving average of 36.07, that's going to be really important. You want to see within the next hour and a half a climb above that. That's going to be important. I had a quick question here from George. George, I'll do this in my show at noon, but Fizz, F-I-Z-Z, congratulations. You've had this a long time. Question is, hoping all is well. Question, do you think Fizz is National Beverage Corporation, F-I-Z-Z, will retest 126 on the monthly? So the one is making the cup formation. It's acting really well. If in December, not November, but if in December it is able to climb and hold above the candle of of November, the high of 100.71, I would say 112. Well, it's at 97 right now. 112 to 100, somewhere 110 to 112 would be my target, one step at a time. But the full cup formation says that by February to March, by February, the high that was made back in September of 124.42 should be hit. In this cup formation, we've seen so many of them come back to the left side highs. That's a left side, right side price time match. Hope that helps you. And I'll just draw this in right now before handing you over. Don't forget Tom and Tommy coming up right after this for their show. This is the bull bear market. What we're looking at right now is the Dow is up only 82 and the S&P is down 1. So, folks, my show coming up tomorrow, my webinar is an all-day webinar. Go to the front page of TFNN. All these particular techniques that I'm talking about will be shown and definitely explained step by step by step. You can come in knowing nothing, and I guarantee you when you come out, you won't be overwhelmed in the sense that I will give you step 1, step 2, step 3, and over a period of time, you'll just get better and better at those things. Then you can add step 4. You don't want to go from step 1 to step 10. You'll learn nothing. So it's a very integrated, systematic way of looking at markets. Have a wonderful day. Stay tuned for shows. I'll be back at noon. You'll be able to hear me. I'll do some things live then again. Have a wonderful day. And tomorrow will not be here, but we'll be back Friday. Have a great day.